Hey, Puppy Trades! I've been a little hesitant to post recently because I want the channel to really kind of represent what I'm doing when I'm not posting. And a lot of people's goals are different than mine when it comes to markets. A lot of people, they have careers, and so their goal is not to live retired. Their goal is to grow their wealth, and they can invest in things like SCHD that have a 3.5% dividend yield, and they can say that's my dividend bucket. I had something on the whiteboard today that had a 21% dividend yield currently, and I was like, that's a little low. 21%. I was like, that's a little low. So there's some things that work in practice, and there's some things that sound like they work on paper. One of the things that I've seen averaging into the Yieldmax short NASDAQ 100 option income strategy ETF blindly yields a 26% annualized return, and averaging, we'll make sure it's the exact same time frames, 23.17%, and averaging into QDTE over the exact same time frame is negative 13.34%. That's a 10% total annualized return. And it means all the dividends, because one ETF shorts the NASDAQ, the other ETF is zero DTE out of the money covered calls on the NASDAQ. Because of this, it means that all the dividends that I collect are without risk, right? So that's really great, because that means I don't even need to do Elliott wave. That means 1, 2, 3, 4, 5 wave 1, A, B, C wave 2 at the 78.6% retracement is just kind of a fun fact. It doesn't really matter to me that Apple is going to bottom. In fact, Apple in the NASDAQ continuing to crash would be pretty good for that pair that I've set up. So this is a large wave 1 and an A, B, C wave 2. The length of wave 1 placed at the wave 2 low gives a wave 3 target up at 271, and Apple's at the 78.6% retracement, where the length of wave A placed at the wave B high is where wave C ends. It's looking pretty good for Apple. That this is a important March quad witching low being put in, and so that's great. Let's look at some of these pairs that don't quite work out, even though they sound like they would. Pairing dips that shorts Nvidia with NVDY. It breaks my heart, but this does not work. Negative 27 and 5%, that's a negative 22% total annualized return. Not good. Fiat paired with CONY doesn't work either. So that doesn't work. It yields a 0% return paired with a negative 31% return. So that doesn't work. Now throwing MSTY in there helps out a little bit. Helps out a lot, I should say. Throwing MSTY in there, Fiat, CONY, and MSTY together, that's a different story. That has actually worked out pretty well based on this. 42% paired with 33% and 0, about a 9% total annual return with an extremely high dividend. So this is the type of stuff that I work on a lot, and I'm moving more and more towards using this only, and this being kind of more fun fact territory. Now, for Nvidia and Coinbase, they do need to be played a certain way. The Elliott wave might be important for these. 1, 2, 3, 4, 5 wave 1, A, B, C, very similar to Apple. It didn't quite go all the way down to 104, and it didn't quite reach the equal X target. But the length of wave 1 placed at the wave 2 low says Nvidia can go up to 165 before a shallow wave 4 and a wave 5 higher. So I won't rule out more downside, but Apple and Nvidia both look like they're ending important wave 2 corrections at the 78.6% retracement. Apple looks like it already has. It's already done enough. Let's look at BITU and Coinbase. I still think this is a really interesting chart. 1, 2, 3, 4, 5. Wave 3 makes the highest high on the RSI, shallow wave 4, and a wave 5 that ends with momentum divergence. And an A, B, C correction at the 61.8 to 78.6% retracement. Above 27.46, the length of wave 1 placed at the wave 2 low gives a wave 3 target up there in the 70s, 81, before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, BITU can go all the way up to 119. So people who want to retire off of the stock market, they don't want to be counting Elliott wave. They don't want to be wholly dependent on this being 1, 2, 3, 4, 5, wave 1, A, B, C, wave 2 at the 78.6% retracement. They don't want to wholly be dependent on wave 1, A, B, C, wave 2, wave 3 of wave 3 occurring. They want to be able to make money in bull and bear markets. So that's why I'm really interested in this ETF total return calculator. The fact that YQQQ looks like it's a short strangle on the NASDAQ when it's paired with QDTE. And this combined positive total return of about 10% is very enticing to me, because it means I could collect all of those dividends without risk. So this is kind of what I'm working on more these days. I noticed that Yieldmax, RDTE, and TWM, Yieldmax, negative 15%, RDTE, negative 23%, but then TWM, the short ETF, more than cancels out all of those losses. It's 113%. So negative 12 plus negative 15 plus 113 equals a pretty positive number. So this is what I'm working on these days. It's shifting away from Elliott Wave, but that's because I'm scaling my investments more to make more money and get more and more income. And I want to be able to do that without being entirely reliant on being the best market forecaster to ever live. Because quad witching, everyone looks like an idiot during quad witching. September, I'll probably look like a fool then too. But this is what I'm working on right now. I hope you guys enjoyed this video, and I hope you found it useful information. Even though it's absolutely not investment advice in any way, I'm going to end this video right now.